Yes, good afternoon. It's Jim from JAGfx.com. It is Wednesday, the 8th of January 2020. This video today is just going to be a second video on my hedging technique on MT4 or MT5, I guess, or any other platform. I'll just show you on MT4 though. So let's just go across to a quick Word document I quickly did up here, nothing too flash. Right, first thing I want to tell you, this is the gimme. Hedging is super high risk. I cannot stress this enough, right? Trust me when I say this. It is high risk and it's not for everyone. Definitely not. And even some people can't do it. Some jurisdictions, for example, say the US, or if you had, say, MT5, the non-hedging account where they just basket your trades together. There are ways around that. For example, if you're in the US, I'm not sure if you can open, say, a sub-account with, say, if you're with Oanda, you might be able to open one account where you just take your buys, another account where you take your sells, sort of thing. Or you could have an account with Oanda, for example, another account with Forex.com, and just spread the love between them. There's ways around it, so don't get too stressed about it. All right, hedging means you are buying and selling the same pair at the same time without stops. So that's why it's high risk. You're going into a trade without stops. You're not buying and selling at the same time. You'll see it in examples shortly, but you could be buying and selling the same pair in the same sequence. You'll see what I mean when we get into it. All right. I use a sequence of 1, 3, 5, 8, 13, etc., which is very loosely based on the fib numbers. If you understand the fib numbers, I think they're 1, 1, 2, 3, 5, 8, 13. I just shortened it a bit at the beginning there, dropped the second one. You can use whatever suits you, all right? So don't be hooked up on these. These are just what I use, works for me, so that's what I'm comfortable with. I know traders that trade, for example, their first trade may be 1.1 lot, say for example, the next trade may be for 1.2 lots. People have got different ways of doing it. I'll show you couple of different methods. So let's just skip over to a chart here, all right? Now someone's requested the pound New Zealand. Now I'll tell you now, this is a challenge. It is a pair that is a tough pair to trade. When it comes, it's a big mover. It moves quickly. But having said that, if you catch a move, you'll make some good profit. So look, it's nothing to be scared of, but it is a pair that can move quickly. As you can see, the big trends here, that's just the start of that's at 2009. So the reason that's flat, there's not enough data to populate the indicators. Now I've got to fix it up. Take 2 seconds. Now this template is just my high probability template, which most of you that are watching this video will probably be aware of. Now, there's a couple of ways you can do this, all right? I'll try and give you I'll pick an example. And this is probably a good area. So I'll make these lines yellow so they're easy to see. Before I go to the simulator. So between here and there, right? Just say, for example. So this area in here, I could even make it bigger if you make it a bit easier to see. So this is what hedging is about. If for some reason you decide to take this buy trade, I've got a green QMP filter dot and the MACD platinum's below the 0 level, so that to me is buy signal. Now, I wouldn't take this trade, probably unless there was some great double bottom or some other supporting divergence or something like that. And there actually was. I'll just, I don't like it this big. All right, I'll just show you. No, for example, you may have taken this trade based on, say, divergence. So there's that low there, across there. All right, so we've got hidden bullish divergence. So that may have got me in the trade because as you've probably heard me going on about. I like hidden bullish divergence. And I can see what happens to the right here, so I know it works out. But just say, right, we're taking this trade. So we're taking a buy in here. Now, this buy trade is taken on the open of this candle here. So that's the buy. I'm not placing a stop. If you were just taking a normal trade, the old bread and butter type of trading, you'd place a stop down here, a few pips below that low or something like that, or based on ATR, or however you place your stops. So you probably have a stop in here. Now, as you can see, this goes, you take the entry in here, it goes up a little bit and it just rolls over. Now, if you had your stop in place down here, it may have been taken out on these candles in here somewhere. But here we have a sell signal. So I take this buy, no stop, then I take this sell signal, same position size. So I took this with one lot, or 0.1 or 0.01 or whatever you took it with. You take this sell trade for exactly the same size. So we're in a sell, we're in a buy, and we take the sell. That's the hedge. So your buy would get you in this level here, and your sell would get you in it on the open of that candle there. So between there and there, you're locking in a loss. You can't lose anything except for swap rates or overnight interest rates and things like that. This is a daily chart, by the way. So it's a pound New Zealand. So we've locked in a loss, and that's approximately, I don't know, what's that? So 531 pips. Now, most people just probably fell off their chair then. That's a lot of pips, but on the pound New Zealand, that's not, trust me. But this is where the mental games start messing with your mind. You know, like as soon as you start seeing that fall away and you see that big candle down. All right, so we've got a buy, we take a sell. Now, it doesn't matter what the market does now, and it continues down. We just sit tight until we get a new buy signal. So we've got a buy, hedge, sell, waiting for a buy signal. Now, in the meantime, the MACD Platinum stayed below the zero level, which is great. And here you get your little warning sign, warning dot down here, blue dot below the MACD, below the zero level of the MACD Platinum. Then we get the buy signal. So here we take the buy. Now this will be a bigger position size than both of these. I'm going to do this with the maths in a minute. You'll see it. So we enter here, and this will be, remember that what have I done there? Wrong. Remember I said that sequence of 1, 3, 5. So say we went in with these trades with 1, this trade would be with 3. So that was one lot, that was one lot, this will be 3 lots. If that was 0.01 and that was 0.01, this would be 0.03. So all we're doing is multiplying it. Now this takes off. Obviously it's good, we're making money. It's decreasing the loss on the original buy, and it's probably taking a loss by the time it gets past that entry level here. It's putting a loss on that hedge sell in here. However, this is 3 times, so this is going up nicely, and following my rules, as soon as it sort of breaks the zero level in the MACD Platinum, we're starting to tighten things up and watch things. So it breaks it through there, so it's probably on the open of that candle. Now, I don't know if that's enough or not. I'll do the maths in a second, but let's just have a look. 3 times 350 something. Gee, that's going to be too hard to do. That's a loser, and that's a loser. So let's just do the maths, all right? So what I'll do is I'll go to this spreadsheet here, all right? Now, what are we? Pound New Zealand, so I'll go to the 5 decimal one. There's 2 sheets on this. I'll show you in a minute where it is. Don't worry about the Fibonacci FX Trader, 3 decimals. So you got 2 sheets. It's either 3 or 5. 3 for the yen pairs or gold, and 5 for the other pairs. So I'll just bring that up again. I'll put my crosshairs on, and remember, using the crosshairs, you can look at the prices down the bottom of the chart here. You'll see down here, once I move across the price, you'll see the opens, and that's all we're interested in, the opens. So I'll bring up that sheet and I'll just show you. Now I just got currency test pair, don't worry about it. So where we start? We started with a buy, which is all you do on this sheet. You can just go to the drop-down menu, pick buy or sell. Once you get past the first T, you can just type it in, but generally I just put buy. So say we use 0.1. So we'll go for the buy. So it's on the open of that candle there. That's 2.26520. Right, sell is going to be the same size, 0.1. And that's on the open of this candle here, which my crosshair's on, so it's 2.21154. Then our next trade is that buy in here, so that's on the open of that candle there. So we'll make that at 0.3. And that will be on the open is 2.18737. All right, so this will tell me now that I'm 0.30 net long. So that's my overall position, even though I've got a total of 0.5. Remember, one cancels out the other. And there is my overall break even. So 2.20526. Now, all right, when I click on, here we go. All right, so where did I say that candle there? The high on that candle, which is the one I said that the MACD Platinum's confirmed cross, is 2.2610. So it's well and truly past the overall break even. So that's the overall break even. Then we have this, got this huge big candle here next, then another big up candle. You know, you could stay in this. There's no red dot on the MACD Platinum until you get up here somewhere. So when it gets up here price, not only are you making like, nearly 3,000 pips there, you're losing 900 pips. So you're 2,000 to the pips profit, and you're probably making a couple of pips there too. So you're roughly about 2,000 pips all up. What you would do there, for example, is you would close this trade, you would close that trade, then you would close 0.02 of that trade. So that win would cover both those trades, where they'd be both losers or one loser and one. Then you would, and now I've got a bloke with a drill somewhere behind me. You're kidding me. I'm just going to pause the video for a sec here and wait for this bloke to finish. All right, hopefully he's finished drilling. It's always the way. So that's it in a nutshell. So this sheet here, if I just expand it, you'll see it shows sells on here if you're interested in just doing the sells or the buys. So in this case, if I just taken the buy and not the sell, if I didn't take that sell and just took that buy and just let that run against me, then took the second buy, there's no downside protection at all. That's the method I talked about in my book. That is a super high risk. I actually said this was super high risk. This one is the super high risk, but it's doable. And some people do it. They don't worry about taking this sell. They'll just take the buy, wait for it, then take another buy. Knowing, like I said, with the MACD Platinum, generally it's like a boomerang, like an elastic band. It'll find its way back to that zero level sometime. And here it has. So keeping in mind now, if you didn't take that sell trade, go back to the sheet and have a look. With the sell trade, our overall break-even is at 2.20526. Without it, it's actually more, 2.20683. There you go. Generally, it's normally, I'll have to check that. But I don't recommend doing it just for the buys. I would stick with the sells. Just gives you some much more protection. So this spreadsheet here, what was I going to show you? Go to the Facebook group, hopefully. So if you go into the JAGfx Facebook group, go to the files folder. As I hear my drill mate starting up again. And down the bottom here, Jackie's multiple trade spreadsheet. That's what it's called, because Jackie's one of my readers that did it for me. So she gets it named after her, or him. I'm not sure. It's a Can't remember if it's a male or female. Sorry, Jackie. And I'm just going to pause again. This is doing my head in. So, all right. Hopefully you stop for a while. Now, so let's just have a look. Now, you got to, when you're doing this hedging technique, I wouldn't recommend you do it with high risk trades. Like, we're in a big downtrend here. So this one worked out because it had hidden bearish divergence. But if you just had, say, regular divergence, say, for example, here, I know that actually worked out too. I'd just be taking on the obvious trades. Like, for example, look, you take the sell there, we're in a downtrend, take the sell, it's a valid signal according to my rules, it goes down through the 0 level on the MACD Platinum, nothing that you don't lose. But see this one here, take this buy here, there's really nothing to get excited about. There's no divergence I would get excited about on this buy signal. So if you took that buy there, which would be on the open of the next candle, then you took that sell on the open there, then took that buy there. See, it's getting ugly, you know what I mean? Like it's just, then it goes down against me. And then you have to get tricky and start drawing like a trend line across here and look for a break to take another trade sort of thing, because this one, there was no new sell. It does get up there and you probably have a win there, but it's just not a, we'll try and look for some examples where it, all right, this one here is another one. Just warm that up a bit. Again, it's probably not a setup I'd take, but if you took it, take the buy there, take the sell, take that buy, and off she goes. So buy, hedge, sell, buy. Yeah, I wish there was an in-between with her. Right, here's one that's probably more relevant. In here, where are we? All right, there's your sell there. Price, we're in a, MAs are starting to spread, prices come down, pull back up. It's not convincing because the MACD's not that far above the 0 level, so it's one that you might give a miss, but just say we took it. So we took a sell there, take a hedge buy there, take a second sell there, take a second hedge buy there, then take your third sell. Now I'll show you how that goes again. That's, where are we? There. Is that it? Yeah, it's there. So we'll go back to Old Faithful. All right, so your first sell, so we're on the sell side now. We'll keep it the same position size. So it's on the open of that candle there, which is 2.04864. And I set up complete, didn't I? Didn't look where I was typing. All right, try again, Jim. That's better. All right, try again. 2.04864. Next one's going to be a buy because that's the way it goes. It's going to be the same position size. So it's on that candle, so it's the open of that one, or close to it. 2.07802. Next one's a sell. That's be 0.3, and that'll be in open of that candle there. 206.413. Now you can have a look, see if you get to the actual break even. The break even there is 2.17758. So you can have a quick look at the low of that candle. Doesn't really matter because I wouldn't be closing out anyway. And the low is below that overall break even. So I didn't have to move much in there to get to overall break even. Actually, it's not. I lied. I didn't press my button. So it's 205. So I didn't get down there, did it? No. Low of 207. sorry, 205467. Got within 3 pips. So it doesn't matter. We'll take the buy, so because the MACD is still above the 0 level. So we'll take the buy on this one. So it's a second hedge buy, so it's the same again. And open on there is 2.11312. So we're hedged again. The sheet will tell you you're hedged or you're net short or long. So then we'll take a sell, and that'll be 0.5. Remember the sequence? So it's just the initial trade is the 1, the hedge is the same, the second trade is the 3, the hedge is the same as that previous trade, then your new one, the new sell is 5. So the sell is here. I can guarantee you that's going to be easier winner. So that's 208,916. So we're net short 0.50. Looks like a lot of trades there, but that's your maximum exposure. And we're going to get to 205 something, and by the time the red line on the MACD Platinum goes through, the low there's 205,142. So we're already below the overall break even, and it drops away nicely, drops away, and you get that, and this is where you make your pips. When things go against you, you'll make your pips if you manage it. Now, it gets to your overall break even, you could start looking at getting, say, close some of these trades or all of these trades and just leave that partial sell on the last sell as a partial trade. You can get creative with your trade management. So once you get to overall break even, you're through that level, then you can start getting a little bit creative. So we'll keep on going, and I'll see if I can. Now, all right, so this is where you could get in trouble. So we've got a buy signal here. If you took that, no, you wouldn't get in trouble because you'd be getting out. It's gone through the 0 level. I'll look for one that gets you in trouble when you take the sell there. Buy. No, you'd probably get out small loss of break even. Sell. So here's another one. Say you took this one. Buy on that. Hedge sell. There's your second buy, and off it goes. Buy, that's a winner. That goes all the way down. That one. It looks a bit too easy. Don't be fooled by it. I've been in trouble plenty of times, so that's why I say it's high risk. Here's another one. Take the buy, hedge sell, take the buy, and it goes up. All right, here's one. Sell, hedge buy, sell easily. Buy. Now, let's see if I can widen this one here. This one here, for example, you took the buy on this one. It's a pretty good setup. Price has gone up, price has gone up, price has gone up. It's stalling, it's stalling, it's stalling. It hasn't quite broke through the MACD Platinum. You get a sell signal here. Sell signal is above the entry of the buy signal. Just close out your buy. Don't go hedging because this high hasn't taken out the previous high. You're still looking at structure. You're still looking at the charts. So you've got to have a little bit of a think about it. And this thing's rolling over. Just don't take the hedge, and it goes, and it just drops off the cliff. So where is it? That's it here. Yep, this one here. All right, now this is where you get in trouble, you see. So we're in a big downtrend. You could make an argument. You got regular. This is regular bullish divergence. Price is heading down. MACD's heading up. Now this is where I say it's high risk. I wouldn't be hedging here. It may work out. You take the buy there, take the hedge sell, take the second buy. You're already through the 0 level on the MACD Platinum, which is not ideal for me. I don't like that. Once I lose that, that's one of my filters, and it's sort of like, losing your right-hand man sort of thing if you're a pilot, like your wingman. I like to have the MACD in play. I can guarantee it works out if you want to trade it. Like you take the buy, take the hedge sell, take the buy, take the second hedge sell, take the third buy, and it keeps on going up. Look at that. I guarantee you that'll get you out of that trade very profitable. But I don't like being above here. And if I was going to do this, what I would do is I'd continue with that sequence, but then I'd start from this trade here. I'd open up a second sequence. So I'd take a sell there, hedge buy, second sell, second hedge buy, and a third sell. And I figured that would get you out pretty close to on that sequence also. So you're running two sequences together. It does get a little bit confusing. I'll see if I can show you on the simulator. All right, what we got here? We've got a nice buy signal. It just goes to the moon. That's good. Sell up here. Winner, winner, chicken dinner. Buy through the MACD platinum. I'm just running through each of these trades here. I've just picked, I've looked at these before. So winner through the MACD platinum. As soon as it's through the MACD platinum, that's considered a winner for me. So through the MACD platinum, buy through the MACD platinum, sell through the MACD platinum. All right, here we go. Get a bit flat and ugly. Buy. No sells, no sells. Through the MACD platinum, small win. Sell through the MACD platinum, small win. All right, what have we got here? All right, we've got a buy through the MACD platinum, small win, probably a loss. Sell through the MACD platinum, winner. Buy through the MACD platinum, winner. Sell, winner. All right, here we go. Another big trend down. So we've made a killing through there. Well, not a killing, but we haven't lost anything. So we took the buy here. This is going to be take the buy, hedge sell, second buy, another hedge sell, another buy. You're through the zero level. So that's where, and it's a big downtrend. You're going against the trend, and you knew you're going against the trend from that original buy. So be smart about it, guys. I can't stress enough. Just put a stop in place. Trade it normally. Bulls on the lows. There might be hidden of it. Yeah, you may have taken that one. Let's just see how it pans out. So you would have taken another buy down here, and not sure it would have been enough to get you out. You would have eventually got out because it headed up there. But then you could have started, started another sequence with a sell in here, hedge buy, and another sell, and through the zero level and got out of that. Then taken that buy and gone back up. So there's another example. All right, sell, initial sell, which is probably a trade I wouldn't take anyway. Hang on a sec. So there's a sell signal, not a great one. There's your hedge buy. There's your second sell through the zero level. Let's see if we've got another one. Buy, which is a signal I would take. Went up, but didn't really push very high. Hedge sell, taken below, so you're locking in a small loss. Comes back down. Then you've got a second buy signal, and that's confirmed, even help with regular divergence there. Take that, goes through the zero level. Then you've got bearish divergence. So I would take this signal. I'll show you why. Because it's, even though it's against the trend, it sort of appeals to me because it's hidden bearish divergence there. So take that sell. Got a hedge buy, second sell, second hedge buy. Still going up. Then a third sell trade. And I reckon that would be in here somewhere, would get you out at least break even or better, or a very small loss. Because you've got to remember too, you'll be making money on these hedge buys. So even though you're losing on the losses, other sells, you're winning big on this bigger one, and you're winning on these couple of hedge buys too. Buy. I'll get on the simulator in a minute. I just want to show you this. All right, where are we? Take the buy there, through the MACD, winner. Let's take the sell if you're crazy enough to, still a winner. Buy, definitely a winner. Sell, if you took it, you wouldn't. All right. Buy, here we go. Buy through the MACD, you'd be out of that. Sell, Buy, yeah, through the MACD. Let's get into somewhere where there's big moves. All right, here's another one. Sells the winner. All right, we've got a buy. Say we took this buy here, hedge sell, second buy. You probably find that would get you out at break even. But if you want to stay in because your MACD was still below the zero level, another, sometimes it's just get out of the trades. Or put, take close out for a bit of a profit and put a stop in place so to protect your overall position. Because if it does turn against you, can always get back in. The MACD platinum's below the zero level, so it drops down again. We did stay in. So we took a buy, hedge, second buy, second hedge, third buy. We're still in. Third hedge, fourth buy. Now we're losing our MACD protection, but it's all right. And up it goes. So it'll definitely be a winner. This is where you get in trouble. If you took the sell here on this one, because remember you wouldn't see what's happened to the right of that chart. These MAs have been pretty tight, and suddenly you come here, take the sell, looks like a good signal. Goes down, lost my crosshairs. You get a buy here. So the hedge buy, so you're locking in a bit of a loss, and bang, up she goes a long way. Another sell, you've got divergence, you're getting cocky now, you think you've got it worked out, and it rolls down through the MACD platinum. I don't know if that'd be enough to get you out. It might be touch and go. Then if you don't get out, then you lose your cool. Load up, you're going long anyway, so you're in a new sequence, and if you're still stuck in this sequence, start a new sequence. You'll have to go through all this mess here on both sequences, but eventually this one will get you out on profit. This new sequence, the second one, the buys, and I guarantee you, I don't know, you would got it. Yeah, that'd be tough. It's a tough pair. I'm glad someone's asked for it. All right, let's move to the simulator. So I'll just go to the Soft4FX Simulator. So I've got it as a template. So I'll just go there. Where is it? Simulator. All right, here it comes up. New simulation. Might as well stick with the same pair. So we'll go to pound New Zealand. Now go to generator. We'll go to New York close. Don't worry about all that crap. I'll give myself 1,000. Actually, I might start a bit later. We'll go to 2010, January 2010. All right, let's start the simulation. All right, let's get a chart up. I might try something different, eh? We'll go for a 12-hour chart or something like that. Add the chart. Open. All right, there's the chart. So let's have a look. Right, this is just a simulator, so we'll get the chart on. We'll get my template up on it so we can see what we're doing. All right, I'm just going to take every trade here. Now, I'm not going to consider how good the trade is or how bad the trade is. We'll just keep it simple. And once I get in profit, I'm just going to take the profit, all right? So I'll show you how this works. If you just keep an eye, there's the equity down here on the bottom left and my floating profit and loss. And I'll bring up a trade box for you when we've got a few trades going. And I'll show you what I'm doing. So, all right. So I'm not going to close any parts. Right. All right, so let's just start off here. We've got a buy signal, we'll take a buy. Move one candle to the right, we're just moving along. All right, this is a good example to start with. Until the MAs are spreading, I'll be going, uh-oh, I've took that buy, take the sell. So I've got two trades on. Look at my trade box. We should stay in the same spot. Took a buy, took a sell. I'm losing $47 and losing $95 on between the two of them. You'll watch my floating profit loss. It'll change a little bit, but not too much. So You can go down, you can see my floating profit loss doesn't change too much. MACD's below the 0 level still. There's a blue dot on the MACD Platinum, waiting for a buy. There's a buy. So I'll take 3, take the buy. And it's gone against me again. You can see my floating profit loss. You can see there's 3 trades up here. One's in profit, 2 are losing badly. It's going up, probably not far enough. We're through the MACD Platinum now, which takes away my shield. See if we can get this in a profit. Right, we're in profit, all 3 trades. We're $3 up. You can have a look here. See the mass, $3 up in equity. It's not enough wiggle room there, but say for example, no, I'm just going to close them all. So I've closed them all 3 trades, we're up $3. Right, so we'll keep on going. This thing could keep on going to the moon, but it doesn't worry me. And it did. So we would have made heaps, so we got a bit creative with it, but that's not what I'm here to show you. I'm here to show you the actual workings behind the hedging. All right, there's a sell. So let's take that. We'll go back to our... So sell, first trade, comes up the box. Through the 0 level, taking a profit, move on. Keep on, went down. All right, here's a buy. It's a valid buy signal. Let's take the buy. I want a hedge here. I don't want this crap. All right, here we go. We've got a sell signal. MACD still below the 0 level. Take the sell. We've got 2 trades open. We're locking in a loss. Doesn't matter where it goes now. There's a blue dot in the MACD Platinum below the 0 level. But price is going anywhere and everywhere. This is a high volatility pair. So it's right, there's a buy. Let's see if we can get ourselves out of the poo here. I'll take the buy for 3. So there's the buy, the hedge sell, the second buy. You can see everything there, what we're running at, our equity, etc. Bang, up she goes. Oh, you bastard. So you can see it went into profit, but then it dropped away. So now we'll take, this is good, we'll take a second hedge sell. There it is there. And it keeps on going down, keeps on going down. All right, there's the next buy. So we'll take 5 here. We'll see how we go. It's going up, at least it's going the right way. Was going the right way. And there's another one. This is good. So we take another sell hedge, same as the previous buy, sell. And I want to show you something here too, which is the MACD Platinum still below the 0 level. This MAs are spreading. There's another buy. So we'll go 8 this time. Take the buy. Nice up candle. MACD's through the 0 level, so we're losing a bit of our protection. Hopefully it'll... Yeah. Let's see how we go here. All right, now this is where I was talking about before. Right, I'll just spread that box a little bit so we can see it. Now we've got a new sell signal here. You can continue on with the hedging. So we'll take a hedge sell, for example. All right, so we've taken a hedge sell, so we're protecting our position to the upside. Now this is a valid sell signal. So let's me take go back to 0.01 and I'll take another sell because this is, I'm keeping a separate sequence here, and this one here, that's that one there, so I'll just put S2, sequence 2, all right? So it just gives me some notes there. So you can see we're building up a few trades here. So I'll keep an eye. Now I've got 2 sequences to watch. I know this is getting a little bit technical, a bit tricky. All right. Now sequence 2, I'm just going to close that, take the profit. It went through the MACD Platinum, so that'll do me. And we've got a buy signal, so we'll get rid of that sequence 2. So we took a little bit of a profit, took a bit of heat off us, and we'll take a buy for, what are we up to? 0.13. Remember the sequence, I'll take a buy. We're back on sequence 1 here. It's going up nicely, and now we're getting close. And there we go, folks. That's you can look at all the trades there. There's the equity. There's the floating profit and loss. That's all them added up, basically. I don't want to push my luck here. You can get creative, like I said, with your trade management. Close all. Now, if we look here at the graph, there's the graph. And if we go into stats, now it looked like a lot of pain there, a lot of trading, a lot of not. Maximum drawdown was only 5.55%. It looked bad because I was in a lot of trades, but that's how it is. All right, so don't get too stressed about it. So let's keep on going, and we'll have a look for more trades. I'll just put that back to 0.01. Now I'm just taking every signal here, so I'm not being selective on my trades. I'm just trying to work out a problem. So here we've got a sell. Possible buy. Come on, give me a buy. Buy, hedge buy. Same position size. Second sell. We're close to the MACD 0 level. Here we go. All right. I can take a hedge buy, and I can also take a new sequence because we've got a new buy below the MACD platinum. So we'll take that. We'll call that S2 just so we don't have any confusion. And we've got a sell, so might as well take a hedge sell on S2. And we could probably take I'll take a sell on the first sequence. That'll be for 5 because we're trying to get out of our initial sell. Now this is where it gets a little bit tricky because your floating profit and loss here is for all trades. So at the moment it's $73, so you might have to do a bit of maths here because that is 6, this is the S2, and 26, so that's minus 20, so we're still down on the initial sequence, so we'll keep on going. All right, I can tell you now the initial sequence is a winner. Let's have a look. Where's the S2? So S2, 35 down and 16 up, so what's that make it? We'll have to break out the old calculator. Well, it's going to be close actually. So minus 35 plus 16 minus 23. All right, so let's just go one more candle, see if we can get some. All right. Everything's good on our initial sequence. So we'll close the initial sequence and we'll try and work out the second sequence. So I don't want to close. All right, so we're losing on the second sequence, and remember that started with a buy on this dot here and a hedge sell. So I know this might be a little bit confusing here, but we'll see if we can get a buy here somewhere. We shouldn't be losing too much. No, we're not. Make sure it's not a buy, don't we? And see, we could have got a little bit creative with that first sequence and just shut some of those trades down and left some open. All right, here's the buy, so let's take the buy and see if we can get this thing in a, it was just about in profit. All right, that's good because I wanted some more examples. So now I've taken a hedge sell. So we had the original buy, hedge sell, second buy, now we get a second hedge sell. Looking for another buy. This is what happened. There's another buy, so we'll go 5 on this one. Didn't go anywhere. Now we're through the MACD Platinum. We'll go another, we're at the MAs. Let's go. There you go, 101. Let's close all, and I'll just about wrap up this video. So if you have a look at my graph, not spectacular, but I didn't pay any attention to what trades I took. Stats, you can have a look at the maximum drawdown was 6.26. Well, we make 311 profit based on 10,000 account just on that short time. That's the 12-hour charts. You can have a look at my trades here. So, and you can, with this simulator, I can run this through. I can just put on, use this little speedy thing and just watch it in action. So if you're curious about how it works, and people say, does that indicator repaint? Just put it on this and you'll find out in a heartbeat. My indicators, by the way, my indicators don't repaint. So hopefully, guys, that's giving you an idea of how to hedge. It's not hard. Play with it on a demo. Be careful on what pairs you choose and what trades you choose. Like I said, if you're in a screaming downtrend and you want to take buy trades, hedging is probably not the ideal scenario. Use stops. If you're in a screaming downtrend and you want to take sell trades, maybe hedging is a thing. Hidden divergence, use hedging. Regular divergence, no. Choose your pair also. Oh, there we go. We've got a problem with data there. Choose your pair also. It's the slow-moving pairs, like the pairs like the New Zealand CAD or something like that, or New Zealand USD, Aussie USD, Aussie NZ, Euro CHF. All those pairs are slow-moving pairs. Try them. They seem to work well, and eventually they'll come back. And the good thing about Forex compared to, say, stocks is Forex trading is between two countries' currencies, whereas stocks have got a general positive bias, as of indices, as is probably gold. But with currencies, you're trading one country's currency against another. And if you stick with the main 8 currencies, none of them is going to get a zero anytime soon. And they always have a sweet spot they want to go back to. For example, on the Aussie USD, the amount of times it'll go back to 70 cents. There's someone hammering away behind me. Anyway, just be smart about it. Pick your trades. Don't just hedge for the sake of hedging. It is high risk. I cannot stress that enough. Anyway, guys, thanks for watching the video. I hope it's cleared up a few things for you, and I'm happy to answer any questions or even do a follow-up video with any specific questions, things like that. It's probably dragged on a little bit now. It's getting near 4 o'clock my time. And thanks for watching. Cheers.